Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
We've got 5 fascinating tech stories lined up for you today. First up, we'll look at the escalating AI talent war, where Meta is reportedly offering massive bonuses to poach OpenAI's top researchers. Then we'll dive into the controversial new crypto bill that could make the sitting president a billionaire. After that, we'll cover a stunning cyberattack where hackers burned $90 million from an Iranian exchange. From there, we'll examine why Chinese firms that dominate Bitcoin mining hardware are now building factories in the US, raising some serious security alarms. And we'll wrap up with Nintendo's stock hitting record highs, fueled by its new Switch 2 console. The opening salvo in the AI talent war was fired with a staggering number. A company is reportedly trying to poach talent by offering signing bonuses of up to $100 million. OpenAI's CEO, Sam Altman, just went on the record claiming Meta is throwing that kind of cash at his employees. But then he delivered the ultimate burn, saying, so far, none of our best people have decided to take them up on that. This isn't just a random offer, you know. Sources say Meta's CEO, Mark Zuckerberg, has become so frustrated with his company's standing in the AI race that he's personally leading the charge to recruit top talent, especially after a delay in Meta's latest flagship AI model. And he's putting his money where his mouth is. Meta just dropped a staggering $14.3 billion for a 49% stake in the AI startup Scale AI, bringing its founder over to Meta to head a new research lab pursuing super intelligence. Now, this might sound like Meta is just desperately trying to catch up, but some tech analysts are actually painting a very different picture. One CEO said Meta basically built the rails for open source AI development and that its massive investments will continue to push it forward. But Sam Altman delivered one final devastating shot. He said Meta is just one of many companies trying to copy OpenAI, adding that basically never works. You're always going to where your competitor was, and you don't build up a culture of learning what it's like to innovate. The gloves are off in the war for AI talent, and the central question remains, can you buy your way to the top, or are you just buying a copy of the real thing? We were just talking about the billions being thrown around in the AI talent war. Well, that's just a drop in the bucket compared to the money-shaping policy in Washington. The crypto industry spent $250 million to get a friendly Congress, and it just paid off with a bill that could make the sitting president a billionaire. The Senate just passed the Genius Act, a landmark bill to regulate digital dollars. The real story, though, is the battle that happened behind the scenes. One senator called the bill Trump's crypto corruption, accusing the GOP of letting the president sell access to the government for personal profit. That senator tried to pass an amendment to stop elected officials from profiting off crypto. It was blocked. Actually, another lawmaker said it was murder just to get enough Democrats to support the bill. So why the brutal fight? Just follow the money. A recent Deutsche Bank report found that stablecoin transactions hit $28 trillion last year. That's more than MasterCard and Visa combined. And now the floodgates are open for banks, fintechs, and retailers to issue their own digital dollars. The Treasury Secretary predicts the market could surge nearly 8-fold to over $2 trillion in the next few years. This brings us back to the president. While the final bill bars members of Congress from profiting, it does not apply to the executive branch. Financial disclosures reveal President Trump earned at least $57 million in 2024 alone from a single crypto platform. He also holds nearly 16 billion tokens in that venture, which could be worth close to $1 billion on paper. Forbes now estimates Trump's total crypto holdings at nearly $1 billion, boosting his net worth to $5.6 billion. So it all funnels down to this. What happens when the person in charge of regulating a $2 trillion industry is also positioned to become its single biggest winner? Speaking of the massive financial upside of crypto, let's pivot to a story where digital currency wasn't used for profit, but for destruction. Hackers just drained $90 million from Iran's largest crypto exchange, Nobatex. This is where the situation takes a more complex turn. Blockchain analysts say this wasn't a heist for profit. The $90 million was siphoned into digital wallets the hackers likely can't even access, effectively burning the money to the ground. A pro-Israel hacking group calling itself Gonyeshka Durand, or Predatory Sparrow, is claiming responsibility. This wasn't about getting rich, it was a politically motivated demolition. The digital trail tells the story. The funds were sent to addresses stamped with anti-government messages aimed squarely at Iran's Islamic Revolutionary Guard Corps, or IRGC. However, if you zoom out, you'll see another layer of strategy at play. According to research firm Elliptic, the targeted exchange, Nobotex, has been linked directly to the IRGC powerful military branch, designated as a terrorist organization by the United States and others. But the connections don't stop there. Blockchain data also shows activity between the Nobotex exchange and wallets associated with Hamas, Palestinian Islamic Jihad, and the Houthis. This attack wasn't just on a financial platform. It was a direct strike at the digital infrastructure, allegedly supporting sanctioned groups in a rapidly escalating conflict. And the hackers say they're not done. They're now threatening to release the exchange's entire source code. The question isn't just about the $90 million that vanished. It's about what secrets are about to be exposed to the world. That last story highlights just how intertwined crypto and geopolitics have become. And that brings us to our next story, where the battleground isn't a hack, but the physical hardware that powers the entire Bitcoin network. 3 Chinese companies control a staggering 95.4% of the world's Bitcoin mining hardware. And now, in a move that's raising alarms, they're setting up production right here in the United States. The companies are Bitmain, Canaan, and MicroBT. Together, they dominate a sector projected to be worth $12 billion. On the surface, this move is a play to dodge escalating trade war tariffs. But the real story is a massive national security red flag. The situation presents a fascinating duality. On one side, over 30% of all global Bitcoin mining happens in North America, while on the other, more than 90% of the essential hardware originates from China. A US competitor, Auradine, paints a stark picture, warning of hundreds of thousands of these Chinese-made machines connecting directly to the US electrical grid. This creates what one crypto law attorney calls a choke point for American miners. He warns that if China were to restrict exports or manipulate the supply, it could seriously disrupt Bitcoin's network stability, affecting users and investors across the US. The reliance is so complete that one of the largest American miners, Mara Holdings, is backing a US rival specifically to try and break this dependency. So why would these Chinese giants move into the belly of the beast? Sources say it's a strategic pivot to create politically acceptable hardware, a desperate attempt to get ahead of even tougher US restrictions. So the thing is, this move doesn't solve the core problem overnight. In the short term, US miners will still be buying Chinese design rigs, just stung by higher costs. As one chief technology officer put it, this isn't about hurting the industry. It's about forcing a long overdue shift. The real question is, in this high stakes chess match, who will ultimately control the backbone of crypto? All right, after all that talk of geopolitical tension and hardware choke points, let's shift gears to a company that's having an absolutely incredible run. Let's wrap up with a number that tells a huge story, $39 billion. That's how much value Nintendo has added this year alone. Its stock just hit a fresh record high, surging 46% in a massive rally. The reason? A single product launch so huge, it's being compared to the iPhone debuts of yesteryear. The new Switch 2 console is causing shortages in major markets, forcing stores to hold special opening hours just to manage the hype. In its first 4 days on the market, Nintendo sold a staggering 3.5 million units. But this isn't just about a hot new gadget. You know, it's really about chasing a ghost. The original Switch was an absolute juggernaut, selling over 152 million units, making it the company's second most successful console in history. Investors are now betting everything that the Switch 2 can replicate that legendary success. What really brought this to a head was the company's official sales forecast of 15 million units for the fiscal year ending in March 2026. What's fascinating is that many analysts are on the record saying that number is a modest estimate and that the company is lowballing its own potential. Since the original Switch launched in March 2017, Nintendo's shares have surged nearly 470%, adding more than $81 billion to its market capitalization. The company has proven it can turn characters like Mario and Zelda into a global empire spanning games, movies, and theme parks. Now, with the Switch 2's explosive start, the only question left is, how much bigger can this empire get?
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.